Welcome, my friends. Today, shares in PacWest fell more than 50% after hours on report bank is considering strategic options. And now 4 banks have failed in the United States. What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is InnerLife.com, creator of the InnerLife STS system. InnerLife STS is a cloud mobile platform for mental health care and its integration with primary medical care. InnerLife STS is designed for assessment, data collection and analytics, documentation, and progress tracking. InnerLife STS creates and composes conceptualized narratives and builds them into professional-grade reports. These reports are designed for use by mental health professionals, primary care physicians, justice system professionals and universities and include mental health assessment reports, mental health treatment reports, and treatment progress reports. And InnerLife STS uses doctor-selected pseudonames for all patients. So, only the healthcare professional knows the patient identity. Pacific West Bancorp is a bank holding company headquartered in Westlake Village, California, that owns Pacific West Bank, a commercial bank that provides a range of banking services to individuals and businesses. The bank has 4 branches located in California, including Beverly Hills, San Diego, Westlake Village, and Fresno. Pacific West Bank offers a variety of financial services, including checking and savings accounts, loans, lines of credit, treasury management, merchant services, and online banking. The bank specializes in providing banking services to small and medium-sized businesses and has a strong reputation for personalized service and responsiveness to the needs of its customers. Pacific West Bancorp was founded in 2002 and went public in 2017. The company's stock is traded on the Nasdaq Stock Exchange under the ticker symbol PACW. As of September 30, 2021, the company had total assets of approximately $1.6 billion and total deposits of approximately $1.3 billion. PacWest Bancorp shares tumbled 56% in extended trading on Wednesday following news that the bank is weighing strategic options. The regional bank is assessing options, including a possible sale, and bringing in advisors to evaluate longer-term plans for the business. Piper Sandler and Stephens are the 2 firms advising PacWest. The shares of many West Coast regional banks have been hit particularly hard since the collapse of Silicon Valley Bank in March, in part because of concerns that their customer bases are similar. This week, First Republic Bank was seized by regulators and sold to J.P. Morgan Chase. The Los Angeles-based PacWest has a roughly $750 million market cap, and is down by 72% this year. On Wednesday, PacWest shares declined nearly 2% during the regular session, and notched their 5th straight losing day. Other regional banks declined in extended trading following the report, with the SPDR/S&P Regional Banking ETF shedding 5.3%. Shares of Western Alliance Bancorp dropped 27%, while Comerica slid 10%. KeyCorp shares fell 7%. PacWest reported that total deposits declined more than $5 billion in the first quarter to $28.2 billion as of March 31st. However, the company said that it saw a net gain of $1.1 billion in deposits from March 20 until quarter end. PacWest also said that deposits grew by another $700 million from March 31 through April 24. A PacWest spokesperson did not immediately respond to a request for comment. Pacific West Bancorp offers commercial real estate loans to its clients. As a commercial bank, it specializes in providing banking services to small and medium-sized businesses, including financing for commercial real estate properties. The bank's commercial real estate lending services include financing for the acquisition, construction, and refinancing of various types of commercial properties, such as office buildings, retail centers, industrial properties, and multifamily residential properties. Pacific West Bank's commercial real estate loans are typically tailored to meet the specific needs of its customers and can be structured with a variety of loan terms and repayment options. The bank's lending officers work closely with borrowers to understand their business and financing needs and to develop loan solutions that meet those needs. It's worth noting that commercial real estate lending involves significant risk, and Pacific West Bancorp carefully evaluates each loan request to ensure that it meets its underwriting standards and risk management policies. As a private company, Pacific West Bancorp does not disclose the specific details of its loan portfolio, including whether it holds mortgages on specific properties like downtown Los Angeles office buildings. However, as I mentioned earlier, Pacific West Bank does offer commercial real estate loans, which can include financing for various types of commercial properties, including office buildings. So, it is possible that the bank holds mortgages on downtown Los Angeles office buildings or has provided financing for such properties in the past. It's important to note that Pacific West Bank follows strict underwriting standards and risk management policies when evaluating loan requests, including those for commercial real estate properties. The bank considers a variety of factors, including the borrower's creditworthiness, the property's cash flow, the local real estate market, and other relevant factors, before making a lending decision. This helps to ensure that the bank's loan portfolio is well diversified and well managed. In a boost to sentiment, U.S. Treasury Secretary Janet Yellen said that while the U.S. banking system is stabilizing, further steps to protect bank depositors may be warranted if smaller institutions suffer deposit runs. This comes after 4 banks in the United States have failed suddenly. Silvergate Bank of San Diego, Silicon Valley Bank, headquartered in Santa Clara, Signature Bank, in New York City, and First Republic Bank, based in San Francisco. And, you probably recall that Swiss banking giant Credit Suisse was combined with UBS in a shotgun merger. First Republic Bank was seized by federal regulators this past weekend and most of its assets were sold to J.P. Morgan Chase. What caused First Republic Bank to fail? First Republic had a high level of uninsured deposits. Meanwhile, its loan book and investment portfolio also became less valuable as the U.S. Federal Reserve Bank raised interest rates, hampering its chances of a capital raise. First Republic Bank struggled to remain viable following a flight of deposits. Unrealized mark-to-market losses in First Republic's loan book and investment portfolio had been an obstacle to clinching an investment. There are several factors that have contributed to the turmoil in commercial real estate in recent years. Some of the key factors include the following. 1. The COVID-19 pandemic. The pandemic has had a significant impact on the commercial real estate market, particularly in areas such as office, retail, and hospitality. 1. Lockdowns and social distancing measures have resulted in many businesses operating remotely or shutting down altogether, leading to decreased demand for commercial real estate space. 2. Shifts in consumer behavior. E-commerce and online shopping have disrupted traditional brick-and-mortar retail, leading to store closures and decreased demand for retail space. 2. Similarly, remote work and telecommuting have reduced demand for office space as companies reassess their real estate needs. 3. Economic uncertainty. Economic uncertainty, including concerns about inflation, rising interest rates, and potential tax policy changes, has made it difficult for investors to make long-term decisions about commercial real estate investments. 4. Oversupply. In some markets, there has been an oversupply of commercial real estate space, particularly in areas such as retail and hospitality, leading to increased competition and lower rents. 5. Environmental concerns. There is growing concern about the environmental impact of commercial real estate, particularly in terms of energy use and carbon emissions. 5. This has led to increased demand for sustainable buildings and green building practices. Overall, the turmoil in commercial real estate is driven by a combination of structural changes in the economy, shifts in consumer behavior, and ongoing economic uncertainty. However, the market remains dynamic, and there are opportunities for investors who are able to navigate the challenges and find value in this evolving landscape. But the United States is now teetering on the brink of recession and the digital ad market has plunged. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.